Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1138, and today's date is November 17th, 2016, and the title of the episode is Foreign Central Banks Are Dumping U.S. Treasuries at an Alarming Rate. Let's get into the economic collapse financial news. Now, yesterday I was talking about a cashless society, and I mentioned how Australia, banking giant UBS, they proposed to eliminate Australia's $100 and $500 bill. Well, I made a mistake. Why did I say $500? I don't know, because in my notes, I have it as $150 bills. So I just want to make that correction. There is no $500 bill. It is a $50 bill. Now, what we're seeing today in the economy is that the U.S. government, the central bankers, they are continually trying to push the idea that this economy has completely recovered. And they're doing this on purpose. Obama is still in office. They don't want people to think that, the economy is starting to fall apart. Actually, they're going to try to boost it as much as they possibly can up until January. And then after that, they might wait a month or two. They're going to start letting it slide. Because what we're seeing right now is that they want to make sure, and Obama wants to make sure, that the economy stays afloat. The illusion is kept alive while he is in office. And we can see this by the data that's coming out. It's completely manipulated, and most of it doesn't even make sense anymore. They're trying to tell us that the initial jobless claims, well, they are the lowest that we've ever seen in 43 years. And they're trying to convince us that people aren't getting laid off. Nobody is applying for unemployment. Everything is perfect. I mean, this is the lowest initial jobless claims since November of 1973. But what's very interesting when we look at initial jobless claims is that every time they hit the low point, all of a sudden, we go into a recession. And if we go back in years, we see it going all the way back to 1973. And then all of a sudden, we're in a recession. When we go back to, say, 1979, 1980, the same thing happened. When we go forward to 1989 to 1990, we saw the same thing. 2000 to 2001, same exact thing. 2007 to 2008, we hit a low point, and boom, all of a sudden, we're in the Great Recession. This time around, we are at the lowest point we have ever seen. And what's very interesting about this is each time we go lower and lower and lower, the recessions are worse and worse and worse. This time we're so low that this is going to be a complete depression, complete collapse. There's no way around this. And it is a pattern that we are seeing. And while they're trying to tell us that initial jobless claims is at the lowest point ever, AOL is going to be laying off 500 people, Univision is going to be laying off 250, First Solar is going to be laying off 1,600, Farmers Insurance is going to be laying off 103, Boeing is going to be laying off 500 and closing plants. But everything's fine. There are no problems whatsoever. We see Wells Fargo is in trouble. Their new account openings are down by 44%. Of course, they were committing fraud by opening fake accounts. But of course, the bank is still operational. Nobody went to jail. Nothing happened. Credit card applications, they're down by 50% right now. It's a complete disaster. We see that the core CPI remains above the Fed's mandated 2% for 12 months as the cost of living surges the most since 2007. And we all know that the cost of living is continually moving up. All you have to do is go out shopping. Yes, they dropped a little bit when the gasoline prices dropped, but they're still very high. And they're creeping up a little bit. And what they did was they took products and they made them smaller. They replaced products with other ingredients, cheaper ingredients, to get around this, to make it look like things weren't going up in price, or I should say that the dollar was devalued. We see the corporate media, the U.S. government is out there saying that housing starts, well, they smashed all expectations. They surged the most since 1982. It's incredible. How did this happen? Well, just because someone's starting a house doesn't mean it's going to be completed. Remember, yesterday we talked about D.H. Horton, and we can see there's a huge amount of cancellations. There were a lot of people starting the houses, and then all of a sudden, we had to cancel. And most likely, we're going to see the same thing. But very curiously, what we're seeing right now is that as housing starts are surging, mortgage applications are plunging by 30%. I mean, look what happens when the rates tick up by a little bit. Everything starts to fall apart. Can you imagine if the rates moved up to 4.5 or 5%? It would be a complete disaster. I mean, think about this for 1 second here. If rates rise by 1 percentage point, for example, 3.5 to 4.5, the monthly payment for many cash-strapped households completely moves out of reach. With a $220,000 mortgage, the monthly payment would jump from $988 to $1,115. That's $127. Now, if you take the $220,000 mortgage and you double that, well, guess what? It gets worse. If you triple that, it's even worse than that. And 4.5% is still very low. Can you imagine if it went to 7 or 8%? What would happen? The whole entire housing market would implode on itself. This is what the central bankers have been doing. They've been keeping the rates very low. Some places they're negative because they have to. They have no choice. Because if they let them move up, the entire system implodes on itself. We see that the TPP, the TTIP, well, it looks like it's dead. And what we're seeing right now is Australia is saying, okay, you know what? Since the TPP is dead, we're going to be looking at China's trade deal instead. And they're going to be looking at their free trade deal in the Asia Pacific. And we're seeing a lot of countries now are saying, you know something? We're going to go with China's trade deal, and we're not going to go with the United States trade deal. Because inside the United States trade deal, there was a provision where this court system would be above the government's, above the country's government's court system, and they would overrule governments, allowing the globalists, the elite, the central banks to have power over these governments. And many of these countries, many of the people in these countries are saying, this is not good for us. This would remove our sovereignty. We would be controlled then. And this is why a lot of these countries objected to it. I mean, there were many other reasons, but this is one of them. And we understand that Donald Trump, well, he's coming into the White House. And he needs to do one thing and one thing only right in the beginning. He needs to get rid of the central bank. I know I said this before, but we need to know where he stands. Is he with the central bankers? Or isn't he with the central bankers? Because we can see right now, he's not really mentioning anything about this. Because remember, we are controlled now by a foreign entity. It's not the government, it's a corporation where they are telling the people's government on what to do with the economy. They're telling the people's government that you must take this currency and you will owe us interest on this currency. The interest on the currency that's created out of thin air, that enslaves a population to that central bank. That enslaves a government to that central bank. And as the debt builds, they can't get out of it. And it gets worse and worse. And we know that ever since the Federal Reserve was created in 1913, well, there's been 18 distinct recessions or depressions since that time. They don't have a good track record. It's time for a change. It's time to take back the power. And many countries are very worried about the United States, very worried about the dollar. Because what we're seeing right now is a lot of foreign central banks, well, they're liquidating U.S. paper. They're dumping Treasuries. Because we're seeing that they've dumped about $14 billion over the course of a week, pushing the total amount to $2.788 trillion, which is a new post-2012 low. So the latest monthly Treasury International Capital data for the month of September, which showed that the troubling trend presented 1 month ago has accelerated to an unprecedented degree. So a month ago, we saw that there was a massive $343 billion in Treasury selling by foreign central banks in the period between July 2015 and August 2016. And that was huge back then. And while we fast forward to today, and we look at the latest monthly update for the month, we find that, well, it has increased. It has increased to $374 billion. So we're already seeing that they're accelerating their dumping of treasuries because they're a little nervous. They understand the dollar is at its end game. The biggest sellers, not surprising, China. We see Saudi Arabia. Guess what? They are dumping their treasuries. And what we're seeing right now is that they're selling it. Who are they selling it to? Well, these private investors. They are soaking up hundreds of billions in central bank holdings. And what we're seeing is there's this huge rotation of treasuries out of official holders into private hands. And most likely these private hands are connected to the Federal Reserve, central banking system. Because what we're seeing right now is that the foreign countries, they're moving away from the dollar. They understand what's going to happen. They understand that this economy is going to collapse and the US dollar is going bye-bye. And this is why, as we track all of this and we look at all of these things that are happening, we need to get prepared. This is why this is happening. This is why we're looking at all of this. To understand what's going on. So we're not caught off guard. So we understand that this is how long it takes. This is what they do during this period, slowly but surely, to bring down an economy. Yes, it's very easy to go back in time and say, yes, I saw it, I knew it, and this is why it collapsed. I mean, a lot of people did this during 2008. But think about all those people that were looking at it beforehand in 2004, 2005, 2006, saying, this is how it's happening. I see it. They're creating these subprime securities. We got rid of Glass-Steagall. I mean, think about all the things that happened leading up to 2008. Because the collapse just doesn't happen. They have to create the bubbles. They have to create all of this and then bring it down. That's what we've been tracking. So we can understand it. So when it does come down, we can say, aha, now we know. Let's just go back in time. Each time they try to do this, we understand what they're doing. There's no question to it. And this is why, this time around, everything that we've been tracking is going to be the worst thing we have ever seen. And this is why everyone needs to prepare and prepare and prepare. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.